Hey everybody, how you doing? Hopefully you're having a nice weekend. For the video this weekend, I'm going to go through some index charts, give some general thoughts on the market, and then we'll look at some setups I'm looking at for next week. So we'll start off, here's the SPY, S&P 500 ETF. We got a little bounce at the end of last week to reclaim this 270 level, but if we start going up a little bit more, we have this 280 level right here highlighted in yellow. This area acted as resistance back here in March and again in June. Then when it was resistance, turned support here in July and August. You could see some bounces off of that. Then in October, as prices came down, we came back to retest the underside of that, and price was rejected at that area. So it's an important area to watch. And if we start going up into that, we'll see how price handles it. And I should mention, we're also right below this 200-day moving average, this dotted blue line here, and that's starting to turn down. So maybe we're looking at potentially a change in the longer-term trend of the markets. We'll see. So that's the SPY. If you look at the RSP equal weighted S&P 500 ETF, a similar look. You know, we're coming back. We got to bounce off the lows, but a lot of work to do to reclaim the major trend, in my opinion. Mid caps the same, just a lot of damage done. The key area here was 355. You could see it was resistance there. Turned into support, a couple bounces, went on to make all-time highs and just sliced right through that. So if we start heading up, we're not out of the woods yet. I think we have a lot of work to do, and I favor a lot of setups in these index charts that are on the short side. So I'll go over those when I go over my charts I'm looking at for next week. Here's IWM, similar story here. You know, we had this area here in IWM that's really key. It was 160, was resistance here, broke above it, finally had a slight retest, went on to make all-time highs, and sliced right through it. Now we're on the underside of that 200-day, which is also starting to slope below. So I did want to pull up the monthly chart of the S&P going back a number of years. And if you follow me on Twitter or StockTwits, you know, I don't use a lot of indicators, but one that I do use is this monthly look with the MACD. And the reason why is it's given some important signals. You could see back here in 2000, we had the bearish cross here, preceding that big drop. You know, 2007, the MACD crossed there before we had the big drop, and we're looking at a cross right here. So sometimes it gives crosses here, like in 2015, we had that bearish MACD cross, and it didn't, you know, we had a slight correction there, but what we did have is about a year and a half of the market basically moving nowhere until it crossed back up. And again, we had a slight cross here in 2011, and before it crossed back up, the market pretty much didn't go anywhere. So the best case scenario over this last 20 years or so, I'm showing this chart, is it has signaled a pause in the uptrend of the market, and the worst case is it's signaled these major tops. So you know, nothing's guaranteed. Markets don't follow a script, but the last few times it's happened, it's proven to be important. And we're getting that cross right here, and we're underneath now. This dotted line here is the 1 year. It's the 12-month moving average. We're underneath that bearish MACD cross here on the monthly time frame, which historically has not been bullish for the market. So just something to keep in mind. If that doesn't correct itself soon, I think we might be headed a lot lower potentially. So let's look at some setups I'm looking at for next week. First one is INT. The energy sector does not look very good, like many sectors right now, but this chart looks really good here. It has this area around $29 that was resistance back here at the beginning of the year. You know, kind of came back to challenge it a few times and couldn't quite pop through it. And then I think on the earnings announcement there, they finally were able to get through it, popped, you know, a nice move above that area. And now we're kind of coming back into it. So if this thing stabilizes and starts moving up again, I think this is a nice tradable opportunity on the long side with the stop slightly below that yellow. So this is one I'm definitely keeping my eye on for next week. Semiconductors I'll pull up the SMH chart really quick so we could see they had that big consolidation at the top of the uptrend. I could see it better on the weekly, and that broke to the downside. And you could see we had that nice bounce last week. But again, we're not out of the woods. It had a nice bounce, but now we're coming into this area here around 101 that has potential to act as resistance. And if we get above that, we'll have the bottom side of that triangle there. So one way to play this is SOX. This is the 3 times short ETF. I actually bought this one around here in the first retest and was able to capture some gains in there, and I sold the rest last week. But now we're back at this point here around 1150 that was, you know, resistance back here in July, kind of came up tested here in August, broke above it, retested successfully, had that nice run, and now we're back here. So if this starts pulling away from this 11.50, $12 area, I think this is a nice tradable opportunity with a stop just below that yellow. Another one here, this is the non-leveraged short Russell 2000. And again, this had this area here around $40 that was support here and here and here. Broke above it, retested successfully, and that's kind of coming back to test that area. So if it consolidates a little and starts pulling away to the upside, I think this offers a nice risk reward trade here with a stop just under the yellow. So this is the short Russell 2000 ETF. SH, this is just the short S&P 500 ETF. Again, this key level here around $29 was support here and here. Kind of danced around it there. Now we're right back there, right by that 200-day that I pointed out in the SPY chart. So this is one, if things start turning against us, the market starts heading down next week. I mean, you can sit in cash, which is a good option until things kind of steady, or you can take advantage of the markets going down. You don't have to just sit on your hands. If there's a good risk reward opportunity such as this that presents itself, you can get in just as you would a long trade. Just put your stop slightly under the key price area and let the trade work for you. So that's SH. This is SCWX. This is a nice looking chart here. I like the consolidation. This 1550 area was resistance, and I like how it consolidated just under it before it pushed above it there last Wednesday, and then it's kind of stood still since then. So if this one starts moving, I think it offers a nice risk reward above that yellow. You could set your stop there. So that's SCWX. KL, this is one I actually bought last week. The gold miners looking a little bit better maybe. And this is definitely a leader within that sector. So you have this area around $20 that was resistance here, turned support, right back here, kind of turned into resistance again. Then it bounced off of it. It turned back into support here last week and put in a nice day last Friday. So I'm looking for this to pull back above it. I entered it long, and I'm looking, maybe I'll take some partial profits here around 2170 and then just let the rest go with the trend. So that's KL. Another one I like here on the long side is Verizon. It has this key area here around $55. Was resistance here and just consolidated underneath it for a number of weeks before finally breaking above it with the earnings there. So now it's kind of just consolidating again above this area. So if it starts pulling away, this looks like a nice tradable long here with a stop. I wouldn't want to put my stop much under that yellow box there around $54. Dollar General, this is one I actually entered it here, and I was quickly stopped out. I entered it here, and I had a fairly tight stop, so I was stopped out for a small loss, but I might get back in it here. It's got this key area here around $112, so it's resistance here, and now it's kind of pulling away from that. So if it starts pulling up away from this $112 level, I might enter it long with a stop slightly below that. So that's another long opportunity I'm looking at. Same with ZTS. This has this area here, around $93 that was resistance here and here. Didn't quite make it all the way, but it was resistance there. And then they had that nice pop on earnings, gave a lot of it back Friday. So maybe it comes back and fills. But if it can get solidify itself above $94, $95, I think this is a nice long opportunity with a stop slightly underneath that. Zen, this one's setting up nice. It's just right at this rising 200-day moving average, which is also just above those lows there from late June, tested in August, acted as support, had a nice run, and it's given all of that back right back to this area. So I actually entered a position in this, right around the current price late last week. So I'm looking for this maybe to get a run conservatively, up to this, $59, $60 level. Look to book some partial profits there because again, like the index charts, there's a lot of potential overhead up here. So I would, if it works that way, I would book some partial profits up there and then just kind of see how it handles it. And again, if it would break below those lows from last week, $52, $51, I would not be in this one anymore. But I think this is a nice looking setup for next week if things go well in the markets. Earnings are behind it. So that's one to put on your radar for next week. So those are just some charts I'm looking at for next week, some potential opportunities. My portfolio is still very heavy cash. I have a couple that I'm looking to potentially add, as I mentioned here, to these short index ETFs. I'll continue to take long stock positions if they're looking healthy and present good risk reward opportunities. But right now, I think some of the more favorable risk reward setups might be in these short ETFs such as SH, RWM, and there's a variety of leveraged ones as well. So we'll see what the market does next week, but it should be exciting. It's been a fun couple weeks, I think, with this volatility, kind of a change in the guard from just, buy the dip. So many things working. This is kind of presenting a new challenge. It's one that I enjoy. So hopefully some of these setups help you for next week, and have a good one. Thank you.